But, well, the markets are just going to, watch the screen and see how much more of a sell-off there is. But after yesterday's fall, our entire research team is now with us to tell us about the list of stocks that you need to keep on your radar in trade today. Varinder joins in first up to tell us about the open interest build-up that we saw in a lot of the stocks that sold off yesterday. Varinder.
Well, the data which I've collected is from the beginning of June series, and that is important to know that, which are the stocks which have seen the highest open interest build-up on the short side since beginning of the June series. And I may sound like a broken record because the focus clearly remains on Bank Nifty, because that is one, index which is constantly seeing short build up. Look at Bank Nifty, that index is down nearly 8% since beginning of the series. The open interest build up is nearly 55% on the short side on Bank Nifty since the beginning of the series. Keep that keep that in focus. Also, of course, important is that if anything happens in terms of reversal, you may see a huge short covering in some of these stocks or index which I'm pointing out because of the short build-up seen over there. ICICI Bank, if you're talking about the private sector banks, ICICI Bank clearly stock is down nearly 8% since beginning of the series. Open interest is up by nearly 91 lakh shares, which is nearly 17% in terms of open interest. This is the highest open interest build-up which we have seen in the entire banking space on ICICI Bank alone. The open interest outstanding on ICICI Bank is nearly 6 crore shares, which is not small by any chance. So nearly 1 crore build-up seen, since in the last 15 days or so, not even 15 trading sessions. So that's the kind of shorting which is happening.
Is there any data to know how much of this open interest is on the short side?
As I said, nearly 91 lakh shares, in the 12 trading sessions which is there. So, it's like each and every day.
You're guessing that the bulk of it should be short because the stock has been moving
falling down. From 350 to 290 or something, the stock has been consistently falling down. And if you're watching for PSU banks, Canara Bank is the weakest. Clearly, Canara Bank. The stock is down nearly 17% since beginning of the series. But look at this. The open interest has moved up by nearly 35 lakh shares, of which is nearly 40% build up in since the beginning of the series. The open interest outstanding for Canara Bank is nearly 1.2 crore shares. Hey, look at this. ICICI Bank, as I said, the open interest outstanding is 6 crore. Canara Bank is 1 crore. So you can see how much a build up we are seeing consistently on some of the weak stocks. And of course, for Canara Bank, this is the second highest open interest build up which we have seen post SBI. If you're watching out for other stocks, keep an eye on Apollo Tyres. That stock has seen the maximum open interest build up in non-index stocks. If you're watching out for, stock is down nearly 15-16% since beginning of the series, but open interest has moved up by nearly 34% since beginning of the series. Again, we are seeing some kind of short covering in the last 1 or 2 days on Apollo Tyres. I remember 2 days earlier it was nearly 50 lakh shares addition. So we have seen some covering in Apollo Tyres, but that stock should be on radar. And also watch out for Biocon and Glenmark. Biocon particularly because that has been one of the strongest stocks since beginning of the series. Stock is only down 1% compared to falls of 20% seen on other stocks. We are seeing some short covering there because open interest is down by nearly 4.5 lakh shares or nearly 11%. So, stocks like Glenmark, Biocon are still holding up on the basis of short covering. So if that stops, and if the market moves down, they may be vulnerable, going ahead.
That's a superb message. The weak can get weaker, the strong can get weaker. That's what you're really saying. Well, that's the mood of the market at this point in time, so we have to come to grips with it. Agam, let me get you into this conversation. You have a list of stocks where you saw some delivery-based selling yesterday.
Yes, Varinder already alluded to the weakness that we see in the banking space, particularly the public sector banks. And Canara Bank is the counter which makes it to my list as well, where we've seen a drop around 3.5% yesterday, and we've seen delivery-based volumes moving up as much as 3 times to the 10-day average at around 18 lakh shares. And moreover, its delivery percentage stands at 30%. Varinder has already spoken about the significant increase in its open interest, moving up as much as 26% only yesterday. So aggressive shorts building up there. We also have SBI from the banking space, once again with showing a lot of weakness, where delivery volume standing at 1 crore as against 75 lakh shares as a 10-day average. Again, the delivery percentage is extremely high for yesterday's day, where we moved up at around 49%. We've seen a little bit of an unwinding, but here for SBI it's been more cash-based selling. On the other hand, we also have Idea Cellular, once again a lot of selling coming along, where we've seen the stock itself drop by around 4.5%. Delivery volumes moving up as much as 2 times as against the 10-day average at around 40.4 lakhs. Once again, delivery as a percentage of trading stands at around 55%, so that's pretty high as well. And we've also seen fresh shorts building up in futures. And finally, we have Ashok Leyland, one of the counters which has been holding its own in terms of stock movements, but yesterday, particularly, we saw a lot of weakness, down as much as 2.5%. Delivery volumes moving up as much as 2.5 times as against 10-day average. Once again, delivery percentage standing at 46%, and some amount of unwinding seen there as well. So that's what I'm tracking in terms of delivery-based shorts building up into the system.
Okay, one shouldn't be surprised of the sell in the Bank Nifty. The sell that you're getting is the sell on the Indian economy, and which is the best proxy. So obviously the Bank Nifty takes it on the chin.
One word on Canara Bank, because I just saw that statistics. If you just see the spot price, if you can get the spot price, I think it was 293 and it was in the green.
Yeah.
But if you just the futures and option price, the future price of Canara Bank, I think it is down by nearly 3.5% yesterday at 280.
No, yesterday something unusual happened. If you pulled the entire list of banking stocks, Canara Bank was the only one which was flat to green.
No, but
I mean, more or less.
Futures,
but yeah, so it was
futures.
Obviously something waiting to happen. Enough, it had also fallen enough. So there is a technical factor that yet needs to be explained in the way in which Canara Bank moved yesterday.
All right, well, let's go across to Mangalam. He's watching a lot of the stocks that are near or have breached their 200-day moving average. Mangalam.
Well, that's correct, Sonia. I'll be wearing the technical hat today and give you a whole host of stocks which are around their 200-day moving average. But just to give you perspective, 33 Nifty stocks are below their 200-day moving average. That's 66% of your index below that 200-day moving average. And yesterday, 8 stocks were added to the Nifty which breached their 200-day moving average. That's about 1/4 of the 200-day moving, 1/4 of new stocks being added to that. So some indication of bearishness. But the stocks that are below 200-day moving average can see some further selling pressure. We have big names like Ambuja Cement, Asian Paints, Reliance. I point out Reliance will be in focus because of the AGM as well, but it also breached its 50 and 100-day moving average in trade yesterday. Infosys is one, Ultratech Cement, Bale is another stock that is below its 200-day moving average. But we have a whole host of stocks, of 5 stocks, which are at the 200-day moving average at a precarious position, and we have a very sectoral representation out there. We have HUL from the FMCG space, HDFC from the financial space, TCS from the IT space, Bosch from the auto ancillary space, and Dr. Reddy's Laboratory from the pharma space, a secular list of stocks which are at the 200-day moving average, a precarious position. But the stocks that are marginally above the 200-day moving average that could see some further selling pressure today, or if they breach the 200-day moving average could go further down. We have Idea Cellular, IndusInd Bank, Power Grid, Kotak Mahindra Bank, HDFC Bank, L&T. I'll be watching for L&T because while it's above its 200-day moving average, it also breached its 50-day moving average and 100-day moving average yesterday, indicating some short-term bearishness, and HCL Tech is on the list as well. So that's a whole host of stocks that can either ameliorate from their positions yesterday or exacerbate from their losses today.
All right, thanks a lot for that, Mangalam. That's an interesting list. Well, so much has happened in terms of the market fall that we have quite forgotten what normally we would, keep on our radar as the most important event in the corporate events calendar, and that's the Reliance Industries AGM. The annual general meeting is today at 11 a.m. They are expected to highlight some of the key business strategies for the coming fiscal. As always, it's a much-watched speech. Sajit Mangat, our Mumbai Bureau Chief, is here with what the street is expecting. Sajit.
2 years ago, Reliance embarked on an ambitious $40 billion capex program between FY14 and FY18. At the end of FY15, Reliance had already spent 70% of the capex planned. And in the next 12 months, the street expects Reliance to start commissioning some of the projects in phases. In the meantime, Reliance stock has trailed the Sensex by 71% in the last 5 years and 24% in the last 12 months. At the 41st AGM, the street would be looking at for commentary on 3 businesses. First, the telecom, second, petchem, and third, the retail segment. In telecom, the street would be looking out for a detailed commentary on the launch plans. Reliance has already invested 70,000 crores in the telecom business, and the launch plans of Reliance Jio will be keenly watched out for at the AGM. This entire investment in Reliance Jio constitutes nearly 20% of the capital employed. The second is the petchem, where $15.5 billion will be invested in expansion. 4 projects where the money has been put is expected to add nearly 35 to 50% to the EBITDA of Reliance Industries in the next few years. The third is retail, which has turned profitable, and now Reliance shareholders would like to know what is the future plan for retail going forward. So these are some of the few things which some of the shareholders and investors and market participants would be looking out for at the 41st AGM.
All right, Sajid, thanks a lot for that. And of course, we will trust you to be